Hey everyone. Hey, good to see you, Danny. Danny, I think you might be on mute.
Hey, Paul, can you hear me now?
Yeah, I can hear you. Awesome. Thank you so much. Well, look, everyone, I'm Paul Avrien. I'm a partner at Pantera Capital, and today we have a fireside chat with Danny Chu at Maker's Place. And then after this, we have a metaverse and gaming panel with Mitch Allen of Perion and Alex Paley of Faraway. So, I'll start off with the fireside chat with my friend Danny Chu of Maker's Place, and we'll do this for about 20 minutes, and then we'll move on to the panel. And I have a few questions that I want to ask Danny, but along the way, if any of you guys in the audience have questions for Danny, feel free to post it in the Q&A, and if we have time, we'll try to get to it. Looks like there's numbers are rising, over 500 people here, so this should be a fun talk. And the reason why we do these is you hear a lot from us, but hearing directly from the entrepreneurs themselves that are in the trenches building, and hearing some of their stories and what their companies are doing to really sort of disrupt the incumbents and sort of bring their use cases to life is extremely valuable and insightful. So Danny, I mean, we go way back, and known you since pretty much sort of before this last bull market, and so you're a crypto OG. I mean, can you tell us a little bit more about your background and maybe sort of a high level of Maker's Place?
Sure. Yeah, thanks for having me, Paul. This is super exciting. I'm always happy to share the crazy experience that is the NFT in the crypto world. So as you mentioned, I'm one of the co-founders and CEO here at Maker's Place. And high level, Maker's Place is a premier NFT marketplace for completely authentic digital art. And so we partner with some of the leading digital creatives in the world. They can come to Maker's Place, they can create, upload their NFTs in the form of art largely. And from a collector standpoint, you can be assured that everything that you find on Maker's Place is 100% authentic. We go through that hard work, and you can browse all this amazing digital art and creativity from Maker's Place. A little bit about my background. I've been in the tech space for about 15 years, largely here in Silicon Valley, in and out of startups. I've done a couple startups in the past. Most recently, before Maker's Place, I was an early employee at Pinterest, where I joined very early on there. I went on to lead their growth engineering organization for many years and helped see that trajectory from just a few million users there to over a couple 100 million users during my time there. So had a big hand in that, and then through that experience, parlayed that into this unique insight that I had around how NFTs could empower digital artists and creatives, and turn that into Maker's Place.
And I guess for the audience, just in case of those that don't know exactly what is an NFT, I mean, can you tell us, from your explanation on how folks can sort of think about an NFT, and was this sort of like what you were sort of like, interested when you first got into the crypto space?
Sure. I'll start with the background maybe first. So so as I sort of talked about, obviously I grew up in the digital age, so just had that sort of firsthand experience, and just saw a lot of the inequities that digital creatives face. So Napster, everyone's probably familiar with Napster, and obviously from a user perspective is great, but from an artist perspective is pretty disastrous in terms of their ability to make money. And you kind of take that forward into all the evolution of web technologies, and when I was at Pinterest, it was largely a bit of the same. Saw a lot of scenarios where artists were struggling with things like attribution. So people would be sharing their creations online and pawning it off as their own, piracy issues, and the sort of lack of a digital creator economy, because you know, like when you look at a digital asset, you don't expect to pay money for it. Like, you can find it online for free. And so why would you pay good money for it? So this was like 2017, and CryptoKitties was actually my first introduction to NFTs. And you know, I was already trading crypto at the time for a couple of years, so I was aware of blockchain. But when CryptoKitties came out, it sort of blew my mind, because at first I saw these cats, these NFTs selling for, well, I didn't know they were NFTs at the time. I thought it was literally like digital stickers selling for like thousands of dollars, and one literally sold for like $100,000, something like that. And I thought it was a complete scam. I was like, this is crazy. Like, why would anyone pay anything for these things? But then I got curious and I started to dig into like what's really driving this, and it started to make all the sense. So, you know, if you think about what NFTs are, they're basically a unforgeable digital proof of authenticity that can also define properties like ownership, uniqueness, scarcity, and traits. And so all of a sudden now you have a way to give digital assets a value, because in the past, digital assets weren't scarce. The reason why people wouldn't pay money for it is because you can go and find a free copy on the internet. And so this was like sort of like the first real movement towards true digital collecting. And that was really intriguing. And NFTs really enabled that to happen. They enabled digital assets for the first time to have uniqueness, to have scarcity and traits and things like that, that gave it value in the way that physical collectibles already had value. So people are already collecting Jordan sneakers because it's authentic and they're unique and only a few people are flexing them. Or fine art, the fact that you know, it's an authentic and unique piece of a physical collectible. And so that's sort of my story getting to NFTs, and I sort of touched upon it, but I really think of NFTs as simply a digital proof of authenticity. It's as simple as that. And with it comes the ability for you to get over a lot of hurdles that come with you know, in a physical world, improving the authenticity of anything. NFTs allows you to do that very easily using blockchain technology.
Danny, I totally agree with you. I mean, you know, I think the two things that I usually tell people: authenticity and the provenance of ownership. So I think that increases what can sort of have value, and also be able to attribute value across many different people, which is pretty awesome, especially the original creator, which, as you mentioned, there's people that take away like fees from those original guys. So one of the things that Tyler Winklevoss says, that Bitcoin is better at being gold than gold. And when thinking about the various properties that make art valuable, are NFTs better at being art than traditional art?
Yeah. Yeah, I love that quote. I think the short answer is yes, 100%. And it's not because I'm biased and I run an art marketplace, NFT art marketplace. Yeah, there's actually a lot of advantages if you can sort of wrap your head around the idea of digital ownership. There's a lot. So I'll kind of like rifle through some of these. So like, first of all, we talked about proof of authenticity and provenance. If you think about what happens in the fine art world or the physical collectibles world, that process of authenticating and tracking the history of ownership is extremely onerous, like extremely onerous. Like you have to go through appraisers and experts, and even when you go through that, you hear about it all the time. Like people are buying fakes all the time. There's that Logan Paul example. He just bought like that completely fake set of Pokemon cards for millions of dollars, and it went through a legitimate appraisal process and eventually found out they're completely fake. So that proof of authenticity element is a major issue in the physical world. But from an NFT perspective, it's on the blockchain. It's tamper-proof, it's available. And if you wanted to, you can trace the ownership history right back to the original creator, and it's all there for you. And there's very little risk associated with that. So that's the first thing. Second thing I'd say is around sort of like storage, space, display. And when you think about collectibles, like they take up physical space, right? Like, so if you're a fine art collector, like that has to hang on your wall. How much wall space do you have? If you're collecting shoes or wine, like that has to take up space. Also, like actual preservation of art takes effort of collectibles. Like you gotta clean it, you gotta make sure there's no sun damage, natural wear and tear. Like these are things that you have to maintain. And then, of course, in terms of display, there's only so many walls and places that you can display your collectibles. Whereas with NFTs, it's infinite. Like your display is the internet. You can display it in VR if you want to. You can use it as your profile image on Twitter and whatnot. You know, on Maker's Place, you're displaying it on your online collection. And obviously there's no degradation, it's all digital. And from a space perspective, like you don't have to think about, oh, I'm gonna buy a new artwork for my wall. Like, where am I gonna put my old piece? Am I gonna put it in storage and then hang up my new piece? And so those are real problems that people face. And when you see collecting on collectors on Makerspace today, like you're seeing collectors collect thousands of artworks, which is sort of unheard of from a physical standpoint. And then the last thing I'll say is simply around liquidity. You know, if you wanted to trade, the velocity of trading physical and the delivery of physical collectibles of any sort, it's onerous. First of all, there's all the things I mentioned about like proving the authenticity. You know, there's services like StockX and Goat and things like that that build services around like verification, and that's not perfectly 100% foolproof. And so with NFTs, it's super simple. It's almost like magic when you actually try it out. It's like you take the NFT, you put it on a smart contract, someone transfer the funds, and just like that, there's zero counterparty risk and it happens instantly. So I think from all these perspectives, it really is revolutionary, and it's the future of collecting art, but collecting any digital collectible in general.
That's great. No, I completely agree with you. You know, the storage, even just like being able to sort of share the NFT that you have, you know, really kind of fits into sort of the digital age and digital marketing and everything, and social media marketing. So it's great to really just kind of get into the hands of more and more people. And so I think there's going to be a lot of infrastructure, whether it's how do we appraise these NFTs, how do we better display these NFTs, to even, you know, interesting use cases with DeFi. So you mentioned again, I mean, there are, I know you guys, you know, taking a step back, I know you guys focus on art, but like, what other types of things you think potentially will be sort of NFTs, and any sort of interesting use cases of NFTs that you've seen, you know, kind of reach some scale?
So I think first of all, like NFTs is like any sort of revolutionary platform. There's going to be a ton of innovation, so it's sort of hard to track all this stuff. But the one thing that has always been at the core of an NFT is around access. So that's something that's very unique to NFTs. And so if you think about collecting art, what you're also getting is proof of ownership in the form of almost like a digital ticket, which then provides access to whatever it is. I think that's I think there's an enormous future there, because access breeds community, community breeds engagement. And we already saw this early on last year. You know, we with some of the artists on our platform, we saw examples where, for example, we had a drop with DJ Blau and Slime Sunday, and they released some original artworks and music. And then we did this thing where the NFTs itself acted as a access token to gain access to a private show in Decentraland. And super novel at the time, but everyone thought it was, oh, it's such a unique experience, super cool. But then obviously recently you've been seeing projects like Bored Ape Yacht Club, and those NFTs serve as your identity, access to an exclusive community. And then from that, you can build off of the ability to get like additional NFTs or private events or swag, and just like flexing, like to be part of an exclusive community. That's you know, that's been happening since the beginning of society. There's always been this idea of wanting to belong to community. And so I think I think access and community is going to be a huge use case for NFTs. And and it's going to probably get even crazier from there. But I think that's what I'm excited about.
I totally agree with you. I mean, at NFT NYC, I mean, they had all these different events and parties that you had to have proof of NFT, Board Yacht Club, and Friends with Benefits. And then, of course, like the community is the most valuable thing. So whether they're token gated, Discord channels or, other sorts of exclusive perks that you get. I know Paris Hilton did one with one of our portfolio companies where you get like to meet her in LA and have dinner with her. I mean, these are all things that are just going to just build more communities and keep retention of these communities for these different artists. So I think that's extremely important.
Yeah.
Are there any types of NFTs that you've seen come out that you're maybe not as bullish on?
Yeah, that's also a hard one. I mean, I think that like I hate to judge like the NFTs itself because as I sort of alluded to, like NFTs is a whole new platform for creativity. Like I compare it to like the iPhone for digital creativity. And so you're gonna just see a lot of like wacky like use cases for NFTs come out. Well, seemingly wacky, that could be really interesting and valuable down the line. And so I hate to judge as someone who's like super pro NFT because I just saw the innovation over the years.
Yeah.
Generally though, I would say like value, like the projects that are premised off of not creating real value is probably the thing that I'm most bearish about. And so you're seeing a lot of this happen. And so from some perspective, like, you're seeing these projects that are largely trying to play off of hype, speculation. They're taking existing projects, sort of like creating, like reskinning it and trying to sort of extract as much, value off of the miseducated. I think those are the projects to watch out for. And so like looking at like who's behind the project, what's their plan, who are the artists behind the project. And so I think like those are the ones that I'm probably most bearish about. But overall, I think it's so early. I think anyone who's like trying to really innovate and try something new with NFTs, like I'm all for it. I think that the space needs it, and there's going to be some really an exciting future for what comes from that.
Awesome. No, I I totally agree with you. And on the one of the big milestones that you guys had was doing the historic $69 million Beeple auction with Christie's. Any backstory on how that happened? I mean, getting in touch with Beeple, process of getting Christie's on board, and 69 million. I mean, I don't know if that was, what you guys expected, if it was under, over, but any sort of background on how that kind of came together and what happened there?
Sure. Yeah. So, we before that sale happened, we were in the space for 3 years and just sort of really grinding it out. And we would knock on the big auction houses' doors constantly to see if they wanted to partner with us, because we knew that was sort of the key to unlock mainstream adoption. And so like we always had that sort of line of communication open, but it really started to take hold in late 2020. And we had just completed at the time the largest sale of a digital artwork, and this is a Trevor Jones, Jose Delbo collaboration. And that piece sold for like $110,000. And so after that sale, first of all, it was a beautiful art piece. It had meaning, it had story, everything. And so Christie's reached out to my co-founder and they said, hey, like this is really interesting. I think we're ready to take this leap, but we don't know anything about NFTs or digital art, and they've never really dipped their toes into that. So they wanted to partner with us to kind of shepherd them through that process. So over the course of a few months, we evaluated, worked to kind of see like who would be like a really great representative, if you will, like because this is gonna be the first major NFT auction by an auction house. And so we tapped Beeple and we sort of got him excited. We thought he'd be a really great choice because he had a massive audience.
Yeah.
He actually just came off of a pretty big sale recently, his first NFT sale, and worked together to come up with a sort of narrative and help produce that. And then took that to Christie's in February, and just it blew up. It was phenomenal. And I think nobody expected 69 million. I think like we're like really hoping for like maybe like 10 million. You know, people just sold a piece for like a few million a week before the auction, and we're like, okay, we'd be happy with like 10 million. And then that auction just kept exploding, and it eventually got to 69, and it just blew everybody's mind. So no, I'm not gonna lie and sit here and say that I expected it. It was pretty insane.
Awesome. And then I guess in terms of just like the NFT market, I mean, you know, there are some people out there that say that the NFT market is going to be bigger than DeFi. I mean, it's fascinating to sort of compare both. DeFi had its summer in mid 2020, and it's still going on. And then the NFTs, I feel like, sort of last half of last year, and then this year is going really strong. I mean, how big do you think this NFT market can get?
I mean, I honestly think that it will probably rival DeFi, if not surpass it. And in like, you're talking like trillions of dollars in market potential here. And I'm not being hyperbolic. I think it's based off of a couple things. Like, first of all, as I sort of talked about at the very beginning, it's not like NFTs created value. Like, value was already out there. Like, if you think about all the music, all the like digital creations that are available in games, online on places like Instagram and Pinterest, YouTube, like that value was created over the course of 15, 20 years. It just didn't have there was just no mechanism to unlock that value. And so that's what NFTs did. It provided finally a way to like unlock all this like pent up value. And so like, there's two ways I like to think about it. First of all, like NFTs are kind of are definitely going to disrupt all these different markets. So disrupting the art market, games. You're seeing more and more use cases for NFT games, videos, to fashion, to ticketing, to real world items. Like NFTs are going to disrupt all of this. And then, and so if you think about all the sort of the value that's been accrued in all these different markets that didn't have value, that could like just alone, like looking at social media, that's $1 trillion market. Looking at the art market, that's like a multi-$100 billion market potentially. The e-commerce is a multi-$1 trillion market. And so like looking at these examples, you can kind of see, well, if you started to take all the digital assets out there and assign value, you're looking at a potential for $1 trillion market there alone. And then lastly, I would say like NFTs have been around for like just like under 4 years. And I think this is estimated to be just like a little over like 1 million NFT collectors out there. And you saw the market size today is around 40 billion. And if you compare it to the e-commerce market, which there are literally billions of people buying online, and it's $1 trillion market, I think you can easily see this $40 billion market growing, 100x, even 1000x, because it's so early. So I think like just that's the sort of lens I look at it. I think that it's the potential is enormous, and the sky's the limit.
Awesome. Thank you so much, Danny. I mean, that was extremely insightful, everything from what is an NFT to where the space can go. I think we are going to wrap up and move on to our next panel. I guess lastly, Twitter handle and website, how do you sort of connect with Danny or Maker's Place after this?
Yeah, I'm on Twitter. So my handle is Danny B, DANNIEB. But also check us out on Maker's Place. So makersplace.com, Twitter, Maker's Place Co. Follow us. We got a lot of exciting drops and art showcase on a daily basis. So yeah.
Great. Thank you so much, Danny.
Yeah, thanks for having me.
See you soon.
Take care. Bye.
All right, Alex and Mitch, you guys up?
Hey, Paul, how you going?
Good. Let's see.
Hey, Paul, what's up?
Hey, Alex. All right, we got Alex Paley of Faraway Games. They'll tell you what they are doing, and also Mitch Allen of Perion. So guys, this is the Metaverse and gaming panel. And as you can see, we and especially Alex are already in the Metaverse. And so
I'm in the Dragon Ball Metaverse right now.
I love Dragon Ball. I used to watch it all the time. So each of you guys, I mean, tell us a bit about your backgrounds and what you guys are working on at each of your companies.
Cool. I'm happy to go first. So I'm one of the co-founders of Faraway. We are a blockchain gaming studio. We make the game called Mini Royale Nations. It's the first live multiplayer game on Solana. It's a browser-based first-person shooter. Right now we have around over 2 million registered users. I guess, but before this whole Web3 gaming thing, I was in free-to-play gaming for my entire career. So I was head of studio at Glue Mobile, which was a big public gaming company before getting bought by EA. And then before starting Faraway, I was a VP of product at Scopely, which is a free-to-play gaming company in LA.
Awesome.
Cool. Yeah, hi, I'm Mitch. I'm a co-founder at Perion DAO. I've been in crypto since around 2017. I've been running my own futures trading firm since 2019. But the primary project I work on now is Perion. What we do is deploy both human and financial resources into NFT games, mainly for the purpose of mining assets and generating returns. We also have a focus on creating algorithmic strategies within NFT game economies, and are quite active on the VC side. Across all our team, we have backgrounds in competitive gaming, coding, crypto, and prop trading. So for us, NFT gaming is really exciting.
Awesome. That's great to hear. I mean, it's kind of great to be able to have a gaming company and also sort of gaming platform software project. It's very complementary, and I think there's a lot of synergies across both different spaces. So Alex, I'll start with you. I mean, coming from the traditional gaming world, now we're starting to see blockchain-based games or crypto games. It's an extremely hot sector. What is a blockchain game? And then beyond that, I mean, you're seeing play to earn, right? I mean, what's play to earn? I mean, we've heard of I guess free to play, but can you explain for some of the guys in the audience that are a little bit newer on what sort of makes these games and this model a bit different?
Yeah, so I mean, if you take a step back in free to play, right, these are games with closed economies. So the entire economy, whatever happens, all of the items there are owned by the game developer, right? The players typically have no ownership of the items that they earn, and they have no governance over how that game evolves over time. So play to earn, blockchain games, Web3 games, sort of whatever way you want to call them, they give the ownership back to the players. And I think that's really important. So, this is, if you earn an item in game, you actually own that item. You can trade it with another player. You can sell it on a marketplace. You can do whatever you want with it. And these types of very social peer-to-peer interactions were typically banned in traditional free-to-play games. These were things that would happen on these weird gray market forums. And then if the game developer making the game caught these types of actions happening, they would penalize the player, they would ban their account, they would do all of these other things. The way I sort of call play to earn gaming is just these are games with open economies where the players own their assets and can sort of transact and do whatever they want with them.
Yeah, that makes a lot of sense. I mean, I think, World of Warcraft used to have things like maybe play to earn in the past, but, I think, as you mentioned, I mean, there's just been an evolution of that model from the past to where it is right now, right?
Yeah, and I think the key difference is Blizzard, right? They would ban those accounts that were gold farming or account boosting, or those types of interactions were not transparent or automated. I've done this plenty of times where I paid some person on PayPal and I never got the gold that I ordered, right? Or my account boosted or my account stolen, right? So I think a lot of this stuff now that it's on chain happens very transparently and automatically.
Awesome. No, thank you so much. And then Mitch, I mean, we're seeing a lot of metaverse projects like Decentraland and Sandbox actually merge the two concepts, metaverse and blockchain gaming. I guess, can you describe the relationship and differences between what people are classifying as the metaverse and blockchain gaming out there?
Yeah, sure. I think for ease of distinction, you can start to look at the metaverse as being synonymous with NFTs, ownership of assets within the digital landscape, and their sort of cross-platform usability, where people start to develop their own sort of digital identities. I think Sandbox and Decentraland are great examples of this. On the interoperability side, where you can bring in your own NFTs and they can perform actions with them in game and sort of carry them cross platform. I think what Facebook is trying to develop partially encompasses the VR aspect of the metaverse. So the format they are following maybe more of a walled garden rather than creating the sort of open platform that NFTs allow. I think blockchain gaming is much more specific to gaming applications using NFTs and fungible tokens as in-game assets and items. And that sort of sits under the metaverse umbrella as just one aspect. Yeah, I think that sort of summarizes that. I was just thinking about the what Alex was saying before. I remember buying gold on Diablo 2 back in the day, trying to get some items, and yeah, it was very shady. I think this sort of building things on chain now is such a great development.
Mm-hmm.
Yeah,
Diablo 2 is interesting. No, I was going to say Diablo experimented with the auction house, right? And that was an example of this is what happens if you don't make something on chain natively, right? Your game design isn't specifically dedicated towards like a Web3 economy. So that was an interesting one.
Yeah.
Actually, one of the things that both of you guys mentioned, and I remember when I was getting into figuring out like blockchain gaming, just the fact that, like you mentioned, Alex, that you can own these items, and then potentially then there's more value, and there's a secondary market for these items. But then the concept that like these items can move from different games to games, I mean, that's where I feel like we haven't seen so much of that yet. But I mean, is that something that you think is going to get sort of much larger from sort of like transfer of these?
Yeah, I think it's definitely coming. I think the first thing is you actually just need more games that are built
that out there.
Yeah, because they're actually, like, the space is so new. There just aren't that many games right now. But I think as soon as there are more games, more like bigger NFT projects, right, where it actually makes sense to put them into games, I think we're going to start seeing a lot of that. And that's not just going to be moving assets from game to game. It could be this asset gives this unique benefit or this access to this community or guild in a game. So I think we're going to start seeing a lot of stuff that we probably haven't even thought of here.
Oh, interesting. So similar to what maybe Danny was talking about, like these items actually serve as sort of like access to community, access to perks, like things like that, and then that gets transferred across. Like, oh, that's pretty fascinating. Okay.
Exactly. Yeah, I think that's probably one of the first use cases, just because from a technical standpoint, that's a lot easier to implement than saying like, bring your gun from Call of Duty into this different camera, angle, like isometric third person Diablo style game. So it's always easier to say like, this item gives access to this thing versus we need to make this item look good in a totally different game, in a totally different engine with a totally different camera.
Awesome. Okay, that makes sense. And then I guess one question that someone from the audience had was around Mitch for Facebook. I mean, I guess they came across a little bit of scrutiny recently. They rebranded to Meta, and then recently their stock price kind of took a plunge. I mean, do you think Meta, I guess, made the right decision to sort of refocus on the metaverse? I mean, are they wrong? Are they early? Like, how do you sort of think about like what Facebook did and the reaction of the market, et cetera?
Yeah, look, I think it's a great question. I think from my read, a lot of the earnings issues had to do with the slowing of user acquisition and competition from short form video platforms such as TikTok, rather than specifically the metaverse rebrand. Personally, though, I would have expected the Facebook metaverse offerings to fall under the sort of umbrella of Facebook brands until such a time that demand for them overtook the core Facebook product. I do think they're early for a complete rebrand. I think something like less than 2% of internet users in the developed world own a VR headset. On the other side of the coin, though, I think it's important not to think of the future in terms of the past. I recently purchased 2 sets of Oculus Quest to test with a friend of mine. I think the technology's come a long way, and it'll only get cheaper over time. It's not hard to imagine a world where our sort of day-to-day interaction moves into more digital landscapes. I think against the backdrop of COVID, we saw a use case for that. But yeah, I'm sure Meta are working really hard to lower barriers to entries, and we're sort of definitely keeping a close eye on the developments there.
Yeah, no, that makes sense. I think there are some other factors. I think they're going into the drop of their stock price, but it's sort of interesting that they happen at around the same time, and so there's been some speculation around that. I got another question for Alex, and we go back and forth in terms of talking about how it is to build a company in sort of traditional gaming, and now you're building a company in crypto gaming. I would imagine, and I'm sure there's some entrepreneurs in this panel, or just people that are curious. I mean, any differences that you're seeing in company building, whether it's team or whether it's strategies and things you have to think about between traditional gaming and crypto gaming?
I mean, from a game design standpoint, like it's very different, right? Because now you aren't putting up all of these like blockades, right? You're just saying like, we are going to actually incentivize all of these peer-to-peer transactions, and then need to design around that. And then I guess from a company building standpoint, like the amount of community involvement, is like orders of magnitude higher than I think any other thing I've ever experienced in more traditional game development. Because like, right, you are giving the community like governance over how the game evolves over time, and that doesn't start like when the game is quote unquote released. Like it starts while the game is in development, and you are developing the game almost alongside the community. So it's a very, very different development process as well, because you're getting that constant feedback loop. And a lot of people in Discord that feel like they have a real say, and it's pretty powerful. It's almost like the first time that the community and the game developer has had like a benevolent relationship versus a completely like adversarial relationship, which is what you see typically with like EA versus the players or Activision versus the players. So it's pretty cool. It's definitely different, but I think it's different for all the right ways.
I think that makes a lot of sense. I mean, obviously being able to incentivize your players or users with ownership in the platform, and then giving them voting powers to help sort of direct the path of the company. I mean, that's, both of you guys have governance features within your token. So, I'm sure we could spend quite a bit of time even just talking about how you guys think about governance and everything. But, maybe we'll get to that. I think, Mitch, I mean, when we look at gaming platforms like yourselves, gaming tools and software, part of it is just making these tools really just helpful for players. And, I think it's, for you guys, it's players developing these tools. So it's kind of within the DNA for the platform to sort of succeed. But I guess for you guys, the other part is just picking these games too. What to you, what sort of makes an interesting or successful crypto or play to earn game?
Yeah, look, I think kind of going back to what sort of some of the stuff Alex was talking about before, I think building around the economy and that idea of incentivizing play-to-play sales, something we really like to look for is how in-game assets are created, whether that's through a mining process, and so that sort of brings value back to the player base, or if it's a direct funnel where you're just buying overpriced game assets from the developer because they're NFTs now. So that's our biggest primary consideration. And then obviously we look a lot into the team and how their experience is, and what their sort of end goal is, I think is really big for us. But yeah, it's primarily around how the game's designed and whether the developers are looking to kind of fiddle with the levers and create something new that utilizes these new sort of asset types.
That makes sense. And yeah, speaking of NFT drops, I mean, we've seen in the past traditional gaming companies selling virtual items for a certain amount, and then you've seen some of these NFT drops from games, reach like 4 to 5 figures, and it's kind of crazy. And I'm sure traditional gaming companies think it's kind of crazy that you can sell these, I guess, more authentic virtual items for so much more. And so, look, I mean, there's a lot of things that are that are happening right now. I mean, Disney and I think JP Morgan set up a lounge in Decentraland, Disneyland, appointing a head of metaverse strategy. I mean, there's been acquisitions by Microsoft and Sony. I don't know. I mean, I guess even for both of you guys, I think it's a pretty big question, but like, how do you sort of think about these traditional guys, traditional gaming companies? Do you think they're going to be integrating NFTs? What do you think some of their strategies are going to be, like these larger tech companies in terms of getting into the metaverse or gaming NFTs? Like, how do you guys think about these bigger companies, both Alex and Mitch?
Yeah, so I think they're all going to do it at some point. I think the biggest question is, what franchise do they do it with, right? It's like, will Activision, after seeing what happened with Ubisoft and Ghost Recon, is Activision going to go out and do this with a Call of Duty, or with their, or is Microsoft going to go and do this with their new Bethesda game, right? I think it's like called Star something. Like this is like the ones that created the Elder Scrolls series. And I think everybody has learned right now that retrofitting like a fungible token economy into like a free to play or premium game design, like one, doesn't work from a game design standpoint. Two, really pisses off the players. I think that's the one thing that everybody learned from the Ghost Recon Ubisoft fiasco is you just don't change a game, like game design, like mid-cycle when the game is, post-release. And then two, like only introduce like a fungible token economy if it actually makes sense and is needed. I think one of the big things that I'm seeing, from Web 2 companies, like Web 2 free-to-play or traditional companies, a lot of them are thinking about experimenting with introducing both crypto transactions and typical fiat transactions into the game. And I think that comes off as really, really scammy to players. So I'm hoping that they do not go that route, even though I believe you'll start seeing some of them try to do that in the next 6 months. Yeah,
look, I think from my perspective, it's going to be hard for a lot of developers to shift their thinking, especially if they've come from sort of maybe a free-to-play model or something similar like that, where they have certain ways of extracting value from the player base. I think if they kind of stick to those models they've been using, it'd be very hard for them to kind of pull that off without sort of, looking like they're just trying to rip the player base off. I think as well, the studios that are positioned best, I think, are kind of small to mid-size, where they can take a risk and really sort of experiment with how game design looks in the new space, and not be kind of stuck to more traditional models. And I think that's sort of how we'll see it play out.
Yeah, the way I've been talking to people, about like the difference between like Web 2 or free to play game design and then like Web 3 game design is that, like in free to play, it's all about incentivizing people to spend these tiny little payments, $5, $10, $99, like very, very frequently, right? So it's like incentivizing them to do that multiple times per week. But in Web 3, it's more about incentivizing them to hold rather than to constantly spend these little microtransactions. So it's in one way you're incentivizing microtransactions. In the Web 3 context, you're incentivizing holding and giving people a reason to continue to participate, like in your economy and governance, for the extent of the lifespan of your game.
Yeah, and I think sort of with the Web 3 gaming, we can really bring value back to the player base, where certain players in the game might actually make some money. I think that's a really huge development, where we're no longer looking at games that just serve to extract value from the player base. It's more about bringing something back to them.
Totally agree.
Yeah, one of the questions that's been brought up, and it's still really early, but like, how do you guys think about regulations within NFTs? And of course, NFTs are bleeding into not only collectibles but also in-game items and whatnot. I mean, any thoughts from either of you guys on regulations?
Yeah, sure. I'm happy to jump in. Look, I think as I guess NFT game economies expand, they're certainly going to attract attention. I think that being said, though, people have been spending money in internet economies and marketplaces and video games for a long time. So I don't think regulation is the end of the world. I think sort of the primary behavior from, I guess, game developers specifically would be just staying engaged with regulation. I think our regulatory advisor put it really well. She said, if you're not at the table, you're probably on the menu. So I guess that should probably just be in the back of people's minds moving forward. But yeah.
Yeah. I mean, I was just say it's coming. And I think the biggest thing a game developer can do at this point is give utility immediately to their token when they launch it. Because if you launch a token and it's purely for speculation and there is no utility in the game that you're making right now, you're probably in some dangerous waters. So that's why it's like, I think that we'll see a lot more like Web3 game devs, like maybe not do these really, really early token launches before they can actually, or before a player can actually use the token in the game itself.
That makes sense. I guess diving into a little bit of the product side of things, and then I'll wrap up with a couple of other questions. So on the product side, I mean, Alex, I mean, you guys have some amazing traction so far in your game, and it's browser based. I mean, any sort of thoughts on, or any sort of insights you want to share on sort of why browser based games and sort of what you guys are doing right now in terms of your product?
Yes, I mean, we chose browser for probably for a lot of reasons. I mean, I spent over a decade in mobile free to play, where you're sort of at the at the mercy of the rules and regulations of Apple and Google or any of the other app stores. Obviously, everybody saw that Apple and Google typically they don't really have a stance on this right now, and they're just sort of blocking everything and anything.
Exactly, gatekeepers.
And then Steam, right? They came out and said they're just going to ban all games with NFTs. So really, the only platform where you can move quickly and are safe from like the rules and regulations of any app store is the browser. It's also the platform with, I think, the best UX, like the best user experience when it comes to integrating with other Web3 technologies, namely your Web3 wallets, whether it's your MetaMask or your Phantom wallet. I mean, I think another thing is that we've seen games or play to earn games take off all over the world. And a lot of these markets that they're taking off are these emerging markets where people don't have the highest end hardware, right? And for a browser game, it's playable on literally any internet connected device. So you're able to tap in to all of these markets, like all of these player bases, regardless of whether they have that highest end NVIDIA graphics card. So there's a lot of reasons we chased after it, and I think it's the right choice because it's also really helped us just scale our player base really quickly, right? It's like we've done zero performance marketing or brand marketing at all. Everything is coming from people sharing links with their friends, and I think that's pretty cool. And it's also a really good way to create a community because everybody in our community came from like a friend sharing a link, that person liking the game, awesome, and sharing with other friends.
No, that's great. I mean, it is much easier to just hop on go to your computer, hop on a website and just start playing. I remember the ease of just getting on the game was just great, and it was just a lot of fun. So I can see that working very well across all different types of markets and geographies. Mitch, so there seems to be a lot of gaming guilds emerging, starting off with Axie, and then now sort of broadening off to different games, and then YGG started off with sort of Philippines, and people there making more money than they do at their normal jobs, and then we're starting to see guilds pop up in all these different geographies. I think one question I get asked a lot is, what sort of makes a successful gaming guild? I mean, it's a pretty broad question. I can peel the onions too, but like, is it the geography? Is it the software? Is it the what makes a successful gaming guild, a gaming platform out there to service gamers?
I think it's an interesting question. I think like we certainly try to look at ourselves as being sort of beyond just a guild that sort of employs players. I think like if you do want to be a gaming guild, the biggest focus is finding skilled players and performing at sort of the competitive levels. I think if you look at sort of the economic issues within Axie, they primarily came from the fact that they tried to have everybody win. There was these really easy game modes that anyone could play and make some money, where it sort of doesn't really balance the equation. We think moving forward, that it'll probably look like maybe the top 20% of players can make money, which is still great. It's still a fantastic improvement on, say, where it's at right now, where the top 0.1% of gamers might make money through streaming or competitive esports. So it's still a really big positive. But I think, yeah, if you want to have a competitive guild, definitely focus on competitive players. It really makes sense that they'll be the ones making money. I think for us, what we try to do is look at also strategies with kind of a higher barrier to entry. I think kind of mass producing scholars such as Axie, it's pretty easy and anyone can do it. And that's why the returns decrease sort of quite quickly over time. We think that focusing more on sort of arbitrage strategies and things with a higher barrier to entry works for us, as we can kind of do things that other people can't, and they can continue to make money in places like that.
Man, I hope I can level up and continue to make money. It's going to get competitive out there.
Yeah, I was going to say quickly from a game dev perspective, who like looks at and evaluates guilds. I think one of the interesting things that I've seen guilds pitch recently is their ability to create content for your game, right? Because
that's good. That's a good one.
Yeah, the more quality content they bring in, whether it's YouTube videos, like explainers, guides, like the better it is for the game dev, right? Because it just helps us say, like, oh, you don't know how to play the game, or you don't understand the specific feature, like watch this video. And it's just less that the game developer has to do. And then, right, a lot of these guilds, they'll translate it into every single language. They will guide people, through exactly how to play your game. And it just teaches people about your game and how to play it in the best way possible, in a way that, we don't have to concentrate on it as the game dev.
Yeah, I think that's definitely another huge value add. Our community guy has been so active calling streamers every single day.
Yeah.
Trying to recruit them. So yeah, we're trying to get the sort of top line of Twitch all on the team.
Yeah, no, I agree. It's the education, and you start seeing, you have like on the ground folks really kind of going out there and whether it's like digital education, but also even just like in-person education around like what's going on with like crypto gaming, what's going on like with these specific games. I mean, I think for certain communities, that's going to be even more important than digital.
Yeah. For sure, because these white papers are complex. Like if you've reread some of these ones, like it's like, I'm reading it like multiple times, like trying to figure out what's going on. Never mind. And I've actually made games and designed big game systems. So I can only imagine for like the standard player, like what it feels like to read one of these white papers. It's probably nice to get a 5-minute explainer video.
Yeah.
I think we still haven't transitioned from those kind of scientific level white papers.
Yeah.
I need a cliff note on how to best optimize, sort of getting and using tokens within certain games. So, I guess another question that I'm kind of curious about, and I asked this for DeFi projects, and then I guess for gaming player software or sort of games themselves. But like, how do you guys think about like governance? We talked about this a little bit more, but like for your specific communities and just in general, how do you feel like governance will sort of fold into crypto gaming or crypto gaming platforms?
Yeah, I think for us, we tried to sort of balance our governance for sort of community participation and effective decision making. So our DAO has quite a streamlined governance process proposed. Obviously, we're still building it right now, but essentially we have a subcommittee. The broader DAO can elect that subcommittee, but the subcommittee is sort of going to be around 3 to 5 members max, just so we can kind of effectively make decisions on how to allocate resources. We took a look at a lot of DAOs, and the issue that sort of kept coming up was they had kind of 20 members that were managing all of the decision-making process, and they just couldn't get anything through in time. So that was sort of one of our bigger pieces.
Yeah, I mean, we're definitely also still figuring out this exact way, but I guess in our game, we have like multiple different types of DAOs, right? We have a game level DAO. We have each clans, right? Each clan is a DAO and can govern, how that, the clan leaders or whoever is appointed to that like clan, clan leadership council, right? They can govern how that DAO that clan makes decisions over time. And then we have like these big alliances, which are these, clans of clans, these like almost like super DAOs. And those need to have like representatives from each clan go and vote on how that alliance will do stuff over time. So yeah, it's complex. We're working through it right now. I think almost all game devs are also just working through how this governance works. So that's sort of what Mitch was saying. Well, you don't have this issue where like decisions are happening super slowly, and then we're having like people with good intentions, making these decisions as well, like for the benefit of the clan or for the benefit of the game itself.
Sounds super interesting.
Yeah, it's complex. Like we're definitely seeing a lot of interesting like social behavior right now.
Yeah, that's
yeah, that's great. I always tell my entrepreneurs, I mean, take a look at what's out there and see what you like and build upon it. And there's a lot of stuff that's been tried out in DeFi. And I think you can kind of bring your own spin to sort of using things in traditional gaming and some of the mechanics around that to possibly sort of incentivize with your both your token model but also your governance model too.
Mm-hmm.
I guess we're gonna wrap up here and sort of finish up with like telling folks a little bit more about like what's going on in the space that we're seeing sort of in general. But last ways for people to get more or follow you guys, get more involved with your products and your platforms. I'll give you guys sort of a few seconds to plug.
Yeah, so just play our game. It's Mini Royale Nations. It's miniroyale.io, and just follow it on Twitter for any updates. It's at Mini Nations.
Yeah, just on our side, you can go to Perion, perion.gg to check out our website or follow us on Twitter at PerionDAO. And yeah, you can. I'm also Mitch_Perion if you want to follow me on Twitter as well.
I think my Twitter is like at apaley13, something like that.
Yeah. Awesome, guys. Well, look, I mean, we're really excited to follow how you guys do. Thank you so much for being part of this panel. It's really been like the hottest topic, and we've done I think most of our deals recently on gaming. So people, you could see by over 800 people on this call that people really enjoyed it. So thank you so much, guys, and we're gonna start a quick presentation by Dan.
Awesome. Thanks, everybody.
No worries. Bye.
Hey, thanks. That was awesome. It's such a huge area, so super fascinating for all of us. Hey, just want to give a quick update on the firm and the fund for those of you who are new to Pantera and want some of the background. I was formerly at Tiger Management, where I managed macro trading and was the CFO, and then founded Pantera in 2003. In 2013, we launched the first crypto fund in the US and the first blockchain venture fund. In the next slide, we have a quick overview of what we're doing. We have 95 venture investments, 100 early stage token investments, and manage $5 billion. And for those of you who haven't had a chance to ask questions, we have the Q&A box open, happy to answer it. Our whole investment team is on the line, happy to try and catch up with all those. On the next slide, we have an overview of the funds themselves. We have an early stage token fund that invests in private tokens prior to them going public. So ICOs, distributions like that. That space is an amazing space because there is just so much creativity happening right now and actually not that much competition. And then we also have a hedge fund that invests in and can short. So it's a long short fund, technically. Liquid tokens. So there's about 150 tokens that are liquid enough to trade. And that is a quarterly liquidity hedge fund. None of our funds have lockups. So you can come in on any month in and come out once a quarter. And then we have been, we also have a Bitcoin fund that allows institutions to get exposure to Bitcoin as an asset class. It's basically like an ETF, but it exists, and there's no premiums or discounts or any of the other suboptimal things that you see in other funds. We have managed three venture funds in the past. Our newest vehicle is on the next slide. It's an all-in-one venture style fund. So it's investing in all the different assets we've invested in over the years. It's venture equity plus early stage tokens plus liquid tokens. It's essentially our fourth venture fund, if you will. And on the next slide, we have a kind of an overview of what it is in the fundraising cycle. We targeted 600 million, but we've already gotten commitments for over $1 billion, so the fundraising is going very well. The token markets came off substantially in the last few months, which we think is crazy. That the positive view for tokens is so strong that we think it's a great time to get more engaged. So we're having an additional closing on March 1st. In a couple of weeks, you can get hopefully lock in these low token prices, and then the final closing will be in April. It's going to be at 30 to 40% venture equity, and then 30 to 40% early stage tokens, and then the balance in liquid tokens. An important point to stress: it's not just kind of like Bitcoin and ETH. We're trading 150 different things, and Bitcoin actually is a very small part of the portfolio over time. And with that, I want to hand it back to Paul to talk about the process and our edge. Thanks so much.
Thanks, Dan. So why Pantera? I mean, we get this question from both investors and entrepreneurs. It really starts with our team. So we have a very, sort of strong and diversified team all the way from, top to bottom. And, whether it's Dan's institutional public markets experience, I've been in venture capital for over a decade now, to Joey and the team having very strong technical capabilities. I think from being able to evaluate the technical aspects of these projects, especially as you start getting down to scalability, interoperability, and things around, which technologies will actually help scale blockchains to certain transactions per second, and whether the architecture of some of these companies can sort of handle their use cases. It's really helpful to be able to have people looking at the code and looking at how these systems are designed and making sure that they can really sort of sustain. Outside of that, we have been in the space really early, so we've done a lot of things around thought leadership, and that really helps bring our brand and increase our network within the space. So what that means is we've built up a network that spans Fortune 500 companies, governments, enterprises, other VC firms, etc. And so that really helps us get deal flow. We have our annual summit, we do these webinars. I mean, all of that really just gets ourselves out there. And then of course the connections that we built with investors, all the way throughout. I mean, a lot of these angel investors, a lot of these traditional VC firms really look to us to lead deals or get sort of competitive analysis, get a view on certain sectors, things like that. So really have contributed a lot out there to the community. And then I think the other thing is really around our value add to our entrepreneurs. It starts off with building out a platform that gives them resources around marketing, around security, insurance, regulations, things like that. And then of course, just spending the time to really open up our network and, bring the insights and experiences that we have from building companies within the last 8-9 years to each of these different entrepreneurs. And, having a collective team across both the investment team and the platform team to spend that time across with these entrepreneurs. These entrepreneurs are really the best way for us to, win deals is, being strong references for Pantera. And then I think the last thing that I'll mention is that, we really do try to use a lot of the products that we invest into. And some of our deals have come from us using these products and feeling that these products are high in quality and that, we should use them, and other folks like us, other institutional investors should use these products, or other retail investors should use these products. And so, being a user, driving volume to these products, and being able to find deals that way has been extremely important. If you look at the performance highlights, starting off with venture equity, our funds range from, about 17x for our first fund to even being really, really early in the market, and not necessarily being in first movers for venture fund 2, it's still at around a 7x. And then our current or the venture fund that we just finished deploying out of venture fund 3 in 3 years has already reached 5-6x, and we feel like those numbers are going to get much higher, especially as some of these tokens are still unlocking. So our venture returns are tremendous. And then looking at our early stage liquid token fund and Bitcoin fund, the lifetime to date performances of those funds are great. I mean, everything from 300% all the way up to a staggering 59,000% lifetime to date return. I think one interesting thing that folks ask about is, how we sort of fare on the liquid side of things, especially because you can go out there and you can buy Bitcoin, you can buy Ethereum, and there's a lot of other cryptocurrencies that you can buy. But, with our funds, especially with the early stage token fund, you can't buy early stage tokens. These are basically venture capital, but issuing tokens as a business model. So as you can see, those early stage token returns are outperforming the Bloomberg Galaxy Index. You can buy Bitcoin through us, which can make it very easy for you to do that without having to think about custody and you're subscribing to a hedge fund. So from an optics point of view, I think it's actually better for some institutions to go that way. And then with our liquid token fund, you can see that we're also outperforming the Bloomberg Galaxy Index. It is a smart basket of cryptocurrencies that are already out on exchanges. We not only pick the cryptocurrencies based off of our thesis and based off of data, but we size them based off of the timing of the market and also the timing of where each of these projects are. You can sort of think about the liquid token fund as investing into companies that are still early stage, but that we've had a relationship with since the early stage token fund, or since we've evaluated them all the way since the beginning. So a lot of that information around the team and the product and the strategies are within us. And so I think we can outperform those that are just looking at data and those that are just looking at things without having a lot of that information directly from the entrepreneurs. So that wraps up our presentation, and we can take any questions right now. Hey guys, I'm just running through the questions right now. Definitely a lot of NFT questions that are still out there. I think a lot of them have been answered by some of the entrepreneurs. So I guess the questions that I will answer will be around technology, and then maybe a little bit around some of the other types of NFTs that we're seeing, and then I think we'll wrap up from there. So in terms of technologies, I mean, we are, in terms of, NFTs, we are seeing most of the NFT volume on Ethereum. I think right now, from what I've heard and seen, it's about 10 times the volume on Ethereum than on Solana in terms of NFTs. But if we're talking about gaming, we're probably seeing the reverse, where there's 10 times more gaming entrepreneurs building on top of Solana than Ethereum because of the throughput and the focus that Solana has been putting out there in terms of incentivizing and bringing resources for gamers out there to build on top of Solana. We are seeing some traction on Polygon in terms of both NFTs and in terms of gaming. And I think there are things like Immutable that are starting to draw some game entrepreneurs too. But I think for the most part, Solana has most of the traction. And then I think in terms of other use cases of NFTs, I'm seeing things around music, and I'm seeing things around maybe sports, and I'll probably end it at that. I mean, in terms of music, there are a few different platforms out there that, Audius, for instance, decentralized SoundCloud, and they are allowing decentralized streaming of music. And then, what that enables is, sort of better monetization for both artists and also listeners, as artists are basically keeping more of the fees from their songs, and then revenue from their songs, and then users and listeners are actually getting sort of incentivized and getting some of those revenue back to them. And then in terms of royalties, I mean, there's platforms like Royal and others where they're allowing artists like Nas to tokenize songs and albums. And really, I think what's interesting is to be able to see emerging artists be able to launch their careers and get discovered, and sort of incentivize their fans really early on by tokenizing some of their royalties. And then in terms of sports, I mean, there was something recently where there's a DAO created to help retail investors invest into sports leagues and sports teams. So I think there's going to be a lot of interesting sort of intersection of DAOs and investments into sports teams, or potentially even sports NFTs and gaming. Maybe it's things around fantasy, maybe it's things around sort of like a Zed Run for sports. I mean, I think there's going to be opportunities where people can, further get engaged in real or meta players and be able to have NFTs really unlock, different access, different perks, and have a bunch of different like sports sponsors kind of revolving around these different metaverse or sports related games. I think that covers most of the questions. So I really want to thank you guys for, being a part of the fireside chat and the panels revolving NFTs, metaverse, and gaming. We're going to have another, set of panels for entrepreneurs coming up pretty soon. So we'll let you guys know. And of course, if you guys have any questions about our funds, feel free to email ir@panteracapital.com, or you can email us directly at our first names at panteracapital.com. Thank you so much.